Hi everyone, welcome to another session from your Tutoring team. Your tutor for today is Whitney, and we'll be diving into some accounting today. So we have looked at principles of accounts, a little basic, a little intro, but don't worry. High level accounting students, we got you, yes. So today we'll be looking at accounting for CAPE level. These are CAPE questions, but they're also applicable to like introductory accounting courses at universities and colleges. Today we'll be focusing on introduction to cost and management accounting, actually. So this is unit 2 at CAPE. We'll do an next video for financial accounting, but we're starting off with cost and management right now. But before we go into this, don't forget, reach out to us, contact us, sign up today for your tutoring journey. We make it possible here. And yes, we don't only do CSEC level. So if you see you need the help, CAPE harder, yeah? Take it from me, CAPE is hard, but it's not impossible. And that one is very much possible. I can tell you that it's very possible. Have to put in the work, and if you need help, get help. Simple as that, right? So reach out to us, here at Which Tutoring, where our motto is aplicar el conocimiento, producir resultados, where we apply knowledge and we produce results. Let's get right into it. But before we do, don't forget to subscribe to our channel, leave a like, leave a comment, and of course, don't stop sharing. All right, so let's get right into this video. We'll be looking at Unit 2, 2015 past paper, CAPE, all right? So let's go. Financial accounting provides a historical perspective, whereas management accounting, so note this keyword right here, whereas. If you see something named whereas, just know that we're comparing something, right? So we know, yes, definitely financial accounting provides a historical perspective. So let's compare to management accounting. It emphasizes the future in addition to historical reports, only enables managers to make decisions, emphasizes a current perspective, allows use of budget. The correct answer here would be A, so it emphasizes the future in addition to historical reports. So we use management accounting for future projections, right? And we also have to use some historical data in providing these reports. 2, which of the following ways should plastic that is used in the manufacture of dolls be classified? So we're using plastic to manufacture dolls, right? So right away off the top of your head, it should be, oh, that's a direct material. Like the plastic can be directly traced to the dolls, right? So that's definitely direct material. And if it is a direct material, we say that's a direct cost. If it is a direct cost, you know that it has to be a prime cost as well, because what is prime cost? Direct cost plus your labor cost give you a prime cost, right? So definitely prime cost as well. So that's 2 out of it already. And if it is directly traced to making the product, then it's definitely a product cost. Oopsie. No, it's not a fixed cost. It can't be fixed. It is very variable because the amount of plastic you use depends on the amount of dolls that you produce. So the answer is actually C for this one. Yes, 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 no. So the answer is C. Let's gonna highlight these. All right, number 3. Wages paid to machine operators on an assembly line are classified as. So we're paying wages to the machine operators. They're on the assembly line. So it's definitely, it's not a period cost. No, once it has a relation to do with the plant or the factory, it cannot be a period cost. So no, it's not direct material because that's not material, first of all. it's not an overhead cost. It's actually direct manufacturing labor cost, because these persons who operate the machines on the assembly line are directly linked to the making of the product. Because if they don't operate the machine, then product can't really be made, right? So they have a direct connection right there. Now, items 45 will refer to the following information. Gladstone Limited operates the following differential piece rate system of paying for units of goods produced by employees. First 100 units, $5 each. Any extra units above $100 is $5.50 each. The employees named below have produced the following units. It's Larry, James, Roland, and Clyde. How much did Larry earn? What we're gonna do is look at how much Larry produced. So Larry produced 140 units. So the first 100 units that Larry produced is gonna be $5 each. 5 times 100 is 500, right? But then Larry went ahead and produced 40 more units in excess of 100. So any extra above 100 units is charged at $5.50 each. So that 40 extra unit, that 40 excess units, multiply by $5.50, right? And you're supposed to get what? $220. So add the 500 plus the 220, and we get $720 for Larry's earnings. It's B. This thing is fighting me. Let's look at how much James and Clyde earned together. So James produced 165 units. So the first 100 units, you know, it's $100 each. So it's $5 each, sorry. And it's 5 times 100, which is $500. Cool. Then James produced 65 units in excess. So 65 times $5.50 is going to give you $357.50. Add that to the $500, you get $850. $857.50. That's for James, but they want to know James and Clyde together. So you go ahead now and you calculate Clyde. So Clyde produced 180 units. First 100, you know, that's $500 because it's $5 times 100 units. 80 in excess times the $5.50 is going to give us $440. Add that to the 500, you get 940. We need James and Clyde together. So the 940 for Clyde plus the $857.50 for James will give us $1,797.50, which is C. So that's how much James and Clyde earned together. Yes, you have to work it out, account, do enough working. This thing is fighting against me. Yeah, you see that though? So I can't even highlight the answer properly. See there, it's C. All right, moving on. 6, which of the following is an advantage of the piece rate method of paying wages? Firstly, what is piece rate method, right? Ask yourself, what is the piece rate method? So if your piece rate method is how you get paid based on units produced. So if it is that you don't produce anything, you don't get no money. If you produce 5 units today and 10 units tomorrow you get more money, because the more you produce, the more money you earn. So you get paid based on your units produced, right? So what's an advantage of this method? It's actually D. It is an incentive to produce more within a given time. Because if me no say, I'm getting paid by the amount for me to produce, me go want to produce as much as possible in a given time, so me can get as much money as possible. So in a one day, no, I'm going to just produce 5. Me go want to push myself so me can produce maybe 8 or 10 or so me can get more money for that day. You may have a fallback though, because they might rush to produce something I don't produce them good, but they're asking about advantage, so let's not get into that. All right, number 7. Gibson Manufacturing uses machine hours to allocate manufacturing overhead to all jobs. Highlighting this. For a particular job, the budgeted manufacturing overhead cost is $30,000, and the budgeted labor hours and budgeted machine hours are $60,000 and $100,000 respectively. the predetermined overhead rate per machine hour is, so we need to use machine hour as our allocation, as our activity base, right? Our activity level. So let's look how much they said that. So how much machine hours was estimated? What's our budgeted machine hours? Budgeted machine hours are 60,000. So budgeted labor hours and machine hours are 60,000, 100,000 respectively. So that means that budgeted labor hours goes with the 60,000 and budgeted machine hours goes with 100,000. We need to find the predetermined overhead rate. What's the formula for your predetermined overhead rate? Guys, you need to know this. It's your estimated or your budgeted overhead, right? Total overhead divided by your estimated or budgeted activity base or activity level. In this case, our activity level is machine hours and our total estimated budgeted overhead cost is $30,000. So it'd be $30,000 divided by the 100,000, which is 30 cents, and that's E. So it would be 30 cents per machine hour. That's our predetermined overhead rate. Number 8. In July 2010, the beginning balance of the raw materials inventory account for Kyla Incorporation was $46,000. The ending inventory balance for July was $47,000. Raw materials used during the month totaled $127,120. The cost of raw materials purchased during the month was, so we're given beginning inventory, ending inventory, and raw materials used during the month. And we're asked to find how much raw materials did we actually purchase during the month. So we know how much we start off with, how much we end with, and how much we used, but how much did we purchase during that period. So you're supposed to know that your beginning materials inventory plus purchases of materials, which will give you your materials available for use, minus ending materials gives you your materials used. So this, you're going to just word question, just fill out what you have and work from there, like some algebra thing. So I like to use my schedule. I'm trying to get this thing to write. All right, I'm trying to use the schedule thing. How do I zoom out this thing? Okay, here we go. So we know that beginning, maybe let's write MF material inventory, sorry, plus add, I'm gonna put the plus sign, purchases of materials inventory. That's gonna give us your materials available for use. A, no, don't mind me, just follow me. They do some like a short and work here. So avail for use. Maybe we can't say avail for use. And then from the materials that you have available for use, you're going to less, you subtract your ending material inventory, and then you'll get the materials used. Right? Let's plug in what we have and solve for what we don't have. That's basically all we're doing right here. So we know that beginning material inventory is, so how much did them say? $46,000. Cool. We know that purchases, oh, well, we don't know. That's what they're asking us to find. So question mark. Which will then leave, if you're supposed to add 46 plus a question mark, we end up with a question mark as well, because we don't know. So let's see, we don't know that, because we don't know the purchases, so we can't know how much we have available. But we know ending, so let's fill in ending, because we know our ending, right? Ending is $47,000. We're less than that, remember? And then now, we'd end up with materials used of 127,000 based on the question, 120. I got that from the question, so don't ask where I got it. It's from the question. All right, good. So let's solve for what we do not have. So let's work backwards. We're working from bottom to top. That's what we're doing. So we know that, let's start with here. We know that a number, let's call this number X, minus $47,000, supposed to give us $127,000, 120. How are you going to know what this X is? Basic algebra. X minus 47,000 is equal to 127,120. You will now go ahead and you say, all right, 127,120 plus $47,000 will give us 174,120. So you add right there to know that 174, 120. Excellent. So we have this figure right here. So we just have one more question mark to work out, which is very possible. You know that beginning materials inventory plus your purchases of materials inventory, which is X in this case, should be equal to 174,120 as your materials available for use. So all you gotta say is now 174,120 minus $46,000, and you will get $128,120. So it is maths, it is algebra, and it is knowing your schedule, your manufacturing schedule. So the answer is actually C for this one. Oh, I need to take off this thing. All right, there we go. So the answer is C. It's C, not B, it's C. All right, we'll be going up to number 15. So we're only doing module 1 on this paper. 15 questions per module. All right, which inventory cost flow method assumes that all stock or inventory cost stock and inventory, same thing, units are the same. They're the same. So you assume that all are the same. It's definitely your AFCO, which is your average cost method. AFCO assumes homogeneity. Is that a word? Assumes that they are homogeneous. Number 10, a firm estimates that its annual carrying cost for material ABC is 30 cents per kilogram. Demand is 50,000 kilogram, and ordering cost is $100 per order. The economic order quantity, EOQ, rounded to the nearest kilogram is, so we need to find our EOQ. Cool? What's your EOQ formula? It is the square root of 2 times your demand times your ordering cost divided by your carrying cost. Is it a mouthful? Yeah, kind of know. Let's see if I can edit this thing. So there are different signs that persons use. So I'm going to be using the one from the Cape book. I don't know how to write square root on this laptop thingy. So listen to me. I'm just gonna write square root. So I know what's a square root. So the square root of all of this, I'm going to put in a bracket. 2 SO divided by C. So this is the formula in the K book, where S is demand. So S is equal to your annual demand. O is your ordering cost per order. And C is your carrying cost. Per unit. You may also see D for the annual demand right here. The ordering cost can be seen as CO, and the carrying cost can be as CC, like denoted as that. So just so you know, there are different denotations, letters that they use for the formula. But this one is from the Kate book, so I use this one. So all I do is plug and chug. So plug in what you have. Plug in all of these, sort of substitute all these figures up here into the formula. So you'd end up with 2 times 50,000 times 100 divided by 0.30. And you work that out and find the square root of all of that, which should give you 5,773.5. And you round that to the nearest kilogram. It is 5,774. So your answer would then be D. So the answer for this one is actually D, guys. D, right here. All right, number 11. How are the wages of factory maintenance personnel usually classified? Factory maintenance personnel, right? How are those wages classified? They work in the factory, right? They do work in the factory. But are they directly connected or associated with the manufacturing of the product? So the answer is actually C, because they are indirect labor cost and their manufacturing overhead cost. So definitely C, because no, they're not directly linked to making the product. I don't know why this thing is behaving like this, to be very honest, but I tried to mark the answer. It is C. So they are indirect labor cost and your manufacturing overhead cost. Number 12. So items 12 to 13 refer to the following information for company X, inventory information. So we have opening inventory, materials received, materials requisitioned. The value of the closing inventory using the FIFO method is, hey, pay attention, FIFO. What does FIFO mean? First in, first out. Remember, so the units that we get first, they're the ones that we're selling first. So now, you will realize that we start off with an opening balance of 300 units at $8.80 per unit. Right. So opening, so this is opening of, I don't know why this thing is working against me today. 300 at, all right, they have the third, I'm just gonna write out the figure. So opening 300 at $80.80, that is 2,640. You have materials received. So first you have 1,000 units at $9 each, right? That would be 9,000. You have 600 units at $10 each. That would be 6,000. Please note the order in which you receive them. And then materials requisition was 1,500 units. Which ones first are you going to get rid of? So we requisition 1,500 units. Which one first we're gonna get rid of? If we're using FIFO, we have to get rid of the ones that we had first. So this 300 units at $8.80 gone. Them first are come out. So all of this 2,640, whoops, the money they're gone. Not the money, well, the value of the inventory still, but that gone. Now, if a 1,500, I would know, all right, them 300, they're going gone. First, we need to know where the next 1,200 is coming from. Next, gonna come from where? The 1,000 units at $9 each, because we got those first. So all of that going actually gone as well. We still want to get 200 more units, which will, we take it from this batch, obviously, here, which is the 600 units at $10 each. So you take out 200 units over here. How much you have left as your closing inventory? You will now have 400 at $10 each remaining. And that will give you 4,000 as your ending inventory. All right, bear with right there, so please. All right, here goes. So the value of closing inventory using the LIFO method now. So we're using LIFO. Last in, first out. Remember, that's what LIFO is for. Same information. So we're going to get the first batch from. The last ones that were received, right? So it will be from the 600. So all the 600 gone. Remember, it is 1,500 units that we've requisitioned. So where the next 900 going to come from? It's going to come from this batch up here with 1,000 units at 90 cents each. All right. And that would leave how much? 100 units at 90 cents each, $9 each. Oh my God, I'm sorry. Why am why am I doing that to the people's question, to people their money? So it's 100 units at $9 each. And that will give us $900. Plus, remember, saying never come out of the opening inventory. So what did we record the value over here as? 2,640. So it would be the 2,640 plus the $900, which would give you $3,540. So there we go. Easy 1-2 maths. All right, 2 last questions that we'll be looking at. Which of the following is not a period cost? What is period cost? What's period cost? So these are costs that have nothing to do with making of the product in any way. It have nothing to do with factory or plant, same thing. So they are period costs, right? So you will find like selling and admin, those are period costs. Marketing costs, definitely period costs, and have nothing to do with factory. Direct manufacturing cost, for instance, manufacturing, it's a product cost. So right away we know we say that we answer. Do you have to go no further? But let's go further. Research and development costs that have nothing to do with factory. General administrative costs, nothing to do with factory. The following information was extracted from the books of James Incorporation. Cost of goods sold, ending balance of finished goods inventory, cost of goods manufactured. What is the beginning balance of finished goods inventory for the period? So again, we need to know our schedule. In the income statement, we know that to get cost of goods sold, it is your beginning finished goods inventory plus your cost of goods manufactured, right? Which will give you the cost of goods that you have available for sale. Then subtract your ending finished goods inventory, and that's how you get your cost of goods sold. So it's similar to something at the top where we did, but that was for direct materials, also materials inventory, raw materials inventory. So they're asking us to find the beginning balance. So let's plug in what we have. So we have all the information. All right, should I write? I guess I should write, right? Let me write. I don't know why this thing is doing this, but okay. So it's your beginning finished goods inventory. Am I right? FG for finished goods plus your cost of goods manufactured, your GM, which will give you your available for sale, right? Available for sale. Oh. And then we're gonna subtract our ending finished goods inventory, and then we'll get our cost of goods sold. Cost of goods sold. All right, so this is what they're asking us for the beginning balance. So we do not know this. That's a question mark. We know COGM or cost of goods manufactured is $57,000. So all right, that's cool. We're good. And you would add the 57,000 plus the little question mark. So we don't really know what the available for sale is right now. We're gonna work it sale. We're gonna work it. We know our ending balance of finished goods inventory to be 20,000, I'm saying $20,000. I'm gonna leave off on the zero then. I don't understand this, you know. Sure. And our cost of goods sold is $107,000. So $107,000. Now let's work backwards. We need to find available for sale. It's the same thing like before. So you know, if a number minus 20,000 give you 107,000, what's that number? That number would be $127,000. Right? And then it's the same thing again. We're working our way up. So if a number plus 57,000 give us 127,000, what is that number? We're just gonna subtract. and we should get 70,000 as our answer. It is $70,000. That is A as our beginning balance for finished goods inventory. And this is found in your income statement, guys, income statement section. The first one was found in the manufacturing account, but this one is found in your income statement. All right, so that would actually be it for today. I hope this session was very, very informative, and I hope that you learned something, you know, at least something that you can take with you in your exams. Don't forget to sign up for your tutoring journey here at Wits Tutoring. Yes, we cater for higher level education. So it's not just limited to CSEC. We cater for CAPE students as well. And, you know, some tertiary level, some higher tertiary, other tertiary level, sorry, because CAPE is tertiary. Some other tertiary level. So here's our contact information. Reach out to us and get started today. We know the accounts are so easy, per se, for a lot of persons. So get help if you need help. All right, until next time. Bye.